Here are the crypto top headlines covered in this video. Community responds to Gary Gensler's latest jab at crypto. Next, spot Bitcoin ETF approval still happening by January 10th, analysts say. Also, 2024 will be the year crypto investors get sophisticated with derivatives. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, community responds to Gary Gensler's latest jab at crypto. Ripple CEO Brad Garlinghouse called SEC Chair Gary Gensler a political liability whose actions destroyed the agency's integrity. Crypto community members were quick to clap back at United States Securities and Exchange Chair Gary Gensler for his latest jab at the space's compliance. On December 22nd, Gensler shared a post on X asserting that there's a lot of non-compliance in crypto. The SEC official said this undermines confidence in the space and implied that this leaves victims helpless. Gensler underscored that people who have been affected by the recent crypto bankruptcies can only stand in line in the courts. The community instantly responded to the SEC chair's sentiments, highlighting that the SEC has been constantly asked to clarify what compliance means. Using the social platform's community notes feature that allows users to fact-check posts on X, the community shared that the SEC has not shared a clear stance. The note also pointed out that companies like Coinbase have tried to get regulatory clarity from the SEC in the last few years. Dogecoin creator Billy Marcus also replied to Gensler's post, saying that the SEC chair has not established actual rules. Marcus also proceeded to call Gensler useless in every single way. Ripple CEO Brad Garlinghouse also commented on Gensler's statements. The Ripple executive described the post as stunning hypocrisy and called Gensler a political liability whose actions destroyed the SEC's integrity. On the same day, the SEC said in a new filing that it deeply regrets certain errors that the agency made during an enforcement proceeding. Paul Grewal, chief legal officer of Coinbase, pointed out that while the SEC claims to regret its errors, its chair is browbeating an entire American industry. The lawyer questioned why any taxpayer or judge should believe in those regrets. Our next top headline, spot Bitcoin ETF approval still happening by January 10th, analysts say. The U.S. SEC might not be comfortable with BlackRock's prime execution agent change in its new spot Bitcoin ETF update, but analysts still expect approvals in early January. As applicants for spot Bitcoin exchange-traded funds rush to incorporate new cash-only requirements into their proposals in the last month of 2023, some analysts still expect ETF approvals in the United States by early 2024. Bloomberg ETF analyst James Seifert and Eric Balchanas anticipate that the U.S. Securities and Exchange Commission will approve a spot Bitcoin ETF in January 2024, despite multiple last-minute amendments that applicants are scrambling to add to their proposals. Seifert took to X on December 21st to share his observations about BlackRock's latest spot Bitcoin ETF update from December 18th, which accepted the SEC's cash redemption system instead of in-kind redemptions or those implying non-monetary payments like BTC. The analyst noticed that BlackRock's latest iShares Bitcoin Trust ETF S-1 registration statement placed the term prime broker and the trade credit lender with the prime execution agent, noting that the SEC might not be comfortable with the change. Will be interesting to see who updates their documents after this, Seifert wrote, adding that the SEC might not accept a condition where a third party would buy and sell Bitcoin on behalf of the ETF in the Bitcoin Cash model. The analyst noted that multiple applicants like ARK, Bitwise, and Valkyrie have already set up a cash-only model, while some, including Grayscale and WisdomTree, still have in-kind or cash in their filings. All this is to say, we still think this is happening by January 10th, Seifert stated. He added that some issuers may be left behind, referring to some filers failing to accept the SEC's cash-only model. Seifert's colleague, Balchanis, agreed that the ongoing meetings and calls between the SEC, multiple spot BTC ETF filers are an interesting and good sign for January. We are hearing it wasn't one giant conference call between SEC and every issuer, but rather many calls to exchanges/issuers to reiterate that it's cash creates or you will wait, Balchanis wrote. Our next top headline, 2024 will be the year crypto investors get sophisticated with derivatives. Exotic options, structured products, and collateralized debt obligations will become increasingly lucrative options for crypto trading in 2024. During the 2017 bull run, initial coin offerings, or ICOs, were all the rage. The last bull market in 2021 was dominated by the growth of decentralized finance, or DeFi, and yield farming. Now, as a fresh bull cycle gathers pace, 2024 will bring a breadth of more sophisticated financial products on-chain. From complex derivatives to structured products, big boy instruments and traders will enter the digital asset playground. As we have seen with previous cycles, the crypto ecosystem tends to closely follow the traditional financial or TradFi market. After all, Bitcoin was first designed as an alternative payment system. ICOs even borrowed their name from TradFi's initial public offerings, or IPOs, which date back to 1783. Meanwhile, the DeFi ecosystem mimics traditional financial services such as lending, borrowing, and yield generation only in a decentralized manner, so it seems only natural for more complex financial vehicles should eventually get a Web3 makeover. Already, we have seen impressive growth in the crypto derivatives market. November saw derivatives trading volumes spike 37.3% month on month to $2.58 trillion, the highest since March, though their share of the overall crypto market dropped from 79.9% in September to 73.3%. At the same time, open interest in crypto options has been hitting fresh all-time highs. Alongside this healthy recovery, we are also seeing more sophisticated derivative products, such as the rise of decentralized perpetual futures trading and innovative risk management mechanisms. This will be a key area for innovation as we head into the new year, while we will also see the launch of new complex products that mimic traditional counterparts. In particular, we'll see growth in exotic options, structured products, and collateralized debt obligations, or CDOs, in the crypto space. We have seen some attempts at crypto CDOs, notably from Opium Finance back in 2021, while the crypto structured products market is quietly gaining steam. However, these complex products are still a small fraction of the overall crypto market. For example, on-chain structured products compose just 0.21% of crypto's total market cap, opening a possibility for significant expansion. So what will drive interest in these innovative derivative products? I see three key drivers of this trend in 2024 and beyond. First, growing institutional interest in digital assets will naturally drive demand and innovation in this space. The traditional derivatives market holds an estimated value of 10 times the world's total gross domestic product, or GDP, with derivatives available for virtually every asset imaginable. The crypto derivatives market will see similar momentum in growth as sophisticated traders pile in. Second, as crypto winter-induced nervousness subsides, investors will once again seek outsized returns on their digital assets, but this time we can expect less interest in yield farming due to the high risk of hacks. Instead, attention will turn to derivatives and structured products, often offering the potential for sky-high returns over 100% APY. These complex products offer one thing that yield farming doesn't: downside protection, and this brings us to our last point. After the collapse of Terra, Celsius, FTX et al. In 2022, battle-hardened investors are looking for guarantees that their assets won't just disappear in a puff of smoke. This makes products with a degree of capital protection look attractive. Complex financial vehicles like structured products often offer capital protection, with some, like the so-called shark fin structure, even paying a guaranteed coupon. Structured products essentially allow investors to make an educated guess on the future direction of travel for their chosen underlying asset. In crypto, this could be Bitcoin. With a shark fin product, guessing correctly could result in handsome returns. But even if the guess is wrong, the investor still gets his money back and walks away with a small coupon. The only catch is that his money could be converted to the underlying asset, i.e. USDT to Bitcoin, at an unfavorable price. But this is a much less bitter pill to swallow than, say, the liquidation risk in yield farming. This inbuilt protection is exactly what made structured products so popular in the traditional financial market, at least before the financial crisis decimated trust in complex investment vehicles. At launch in the 1990s, their purpose was to offer investors tailored risk-return outcomes, making them suitable for a wide array of portfolios, and they went down a treat. As the crypto market matures and the focus shifts to more predictable returns within diversified portfolios, these vehicles will get another moment in the sun. In a market still reeling from the events of 2022, capital preservation has become far more important for many investors, especially as crypto breaks out into the mainstream. Demand always drives innovation, so we expect to see new launches in the on-chain structured product space, as well as new complex derivatives projects, spurring rapid growth in assets in these areas. This will be one of the defining innovations of the current bull run. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.